is introductions for the guys on the call today. My name is Jeremy Marshall. I'm based in our Abu Dhabi office here in the Middle East. We also have Richard Bradstock, who is our regional director, and also a special guest, Mimoun Asrai, who is the CEO of Rift Trust, who are a citizenship and golden visa company, who will be able to share some insights into the citizenship side of buying into Portugal. So today's agenda, first of all, we're going to have a little bit of a recap on IP Global, then look at the Portuguese market as a whole, why we entered there and what fundamentally underpins the success and what makes it a good investment story. Then importantly, obviously, the market reaction to COVID-19, what's happened and what the government's done about it, and how that maybe has affected transactions and what's going to be happening from now on. Of course, we have to look at the currency and what that means potentially in terms of opportunities going forward. And then Mimoun will be able to look at the golden visa process, any changes there, and what that really means for those people looking to buy and gain citizenship for it. So, and we'll end with Q&A towards the end there. So please do write the questions in. So IP Global, appreciate there are, by the looks of things here, actually going up to about 300 attendees today, and I can see there's quite a lot of you who are familiar to us and some long-term buyers here. So forgive me for if you know this back to front, but we do have a number of new people on as well. So IP Global, we are a property investment company. We help people to buy property in secure markets around the world and can then advise and guide you through the entire process with end-to-end service. So as with any good investment in any kind of asset class, it should all be based on research, and we have a big investment research team who looks at different markets around the world, looks at following the investment principles that we follow, and look to find hotspots of value that we want to buy into ourselves. In terms of our business model, we have what we call an underwrite, which makes us slightly different to different players in the market, where we're not an agent, we're not working for developers, we have liquidity ourselves, and so we are buyers along with you. So we co-invest, we look to those markets when the research team have found, and we will then buy in bulk for projects in the markets we like. So what this means for us is that we get into markets early, and we are able to negotiate good rates, and we do have a level of control onto those contracts there. So in short, our interests are very much aligned with yours as buyers. So our profits basically come when you are successfully across the line and safe with the property. So along that, we can offer everything throughout the process. So we have our international mortgage company, Complete is the name of our lettings and management company, who will find tenants and manage the property for the entirety of the time you own it. And then towards the end, obviously, we then have, we can help you sell on the property to realise those returns in the end.
So good afternoon, wherever you are in the world. For that, my name is regional director here in the Middle East. So I think what's very important now is to talk a little bit about the context behind where we find ourselves with Portugal and the real estate markets at the moment. I mean, obviously, COVID-19 has been quite an extraordinary thing, an ongoing extraordinary thing that has happened. But what is important, I think, before we go into that, and Jeremy will take us through the Portuguese reaction to that, is to understand a little bit about the market, sort of, I suppose, up to the point where COVID-19 became a dominating factor in world economies. So, I mean, ultimately, and again, I would imagine that most of you on this call have some familiarity with Portugal, but again, it's worth going over. I mean, the story of Portugal over the last 10, 12 years is actually one of a fundamentally very strong economic success story. From 2008-9, where the GFC, the global financial crisis, hit the market, hit the world, and Portugal was no exception to that, incredibly hard. Unemployment rates ended up at sort of 17 or 18%, where the GDP was in sort of free fall for quite a long period of time, where Portugal went to the IMF and EU and borrowed $78 billion. It's been a very impressive story since then in terms of how Portugal has come out of come out of this over the last by 2014. Portugal had actually repaid the $78 billion loan back to the EU and the IMF. Unemployment as of the beginning of this year was at 6.7%, and ultimately, it's been a very, very strong economic story. The regeneration in terms of, for example, in Lisbon, we've got airport investment expansion, we've got metro lines being built, we've got Portugal as a whole has reinvented itself as a tech hub. Both Lisbon and Porto are home to some very major tech players globally, and the real estate market, obviously, when you factor in the low interest rates that are then also available, has basically done very well off the back of this. Clearly, with job creation comes demand for housing. With low interest rates comes a willingness to borrow, and this historically is something, and in the future, that we'll see Portugal very well. From a purely real estate perspective, in 2019, Lisbon was ranked in terms of overall prospect. It was ranked #1 by PwC. And then from an IP global perspective, it's worth noting that the reason we're particularly interested in it, Jeremy mentioned value just now, and IP global search for value. If you look at those numbers at the bottom of the screen, where you have London at one end, albeit these numbers are a few months old, and so from that point of view, subject to change in the current climate, the principle remains. You have London, you have Paris, you have Berlin, where the price per square meter for a super prime opportunity in these markets is significantly more than Lisbon, which offers the same safe haven status, the same low interest rates, the same opportunity in terms from that kind of basic risk model. And so from that perspective, we look at the 8,000 euros per square meter, and actually, if you're looking in Porto, if you're looking in just outside city centre Lisbon, you can actually achieve, less than this. So this is a very strong value story, and clearly we're about to talk about COVID-19, and we'll hear about how that has affected things. From a context point of view, from a general point of view, we are talking about a very resilient, strong economic story and property market. So at this point, I'll hand back to Jeremy to talk a little bit about Corona.
Yeah, so the next couple of slides, it's very much some stats, some facts here about what's happened in the market, and no one wants to dwell on some of these, but it's important to understand what's happened there and what that impact's going to have for the market going forward. So this, in context, I suppose, what we have to remember is that Europe and that side of Europe became very much the epicenter of the outbreak for a good month there, with Italy and Spain having the highest numbers globally. And so Portugal's numbers belie that way there. So what we can see is that on 11th of May, these stats were that cases to date were 27,581 in the country and only 1,135 deaths, and that is a lot lower than its neighbour Spain and France, United Kingdom and Italy, which have borne the brunt of it. So first case came on 2nd of March. Portugal has actually had the lowest spreads rate in Europe over the first 25 days of the epidemic. So a lot of this and the success is about timing and what the government was able to do, but then actually what it did do. So it had the advantage of being able to look at this early, but then did react, do it very well. So government declared total lockdown when it was only just 100 cases, and then only 2 days after the first death, they declared a state of emergency. So what this has resulted in is Portugal's mortality rate is only around about 4% compared to 15% in the UK and about just over 19% in France. So relatively, as dark as that sounds, it's a success story. So So yeah, the time to prepare that Portugal had, it has been used very well. And so part of this is not just the fact that they had the time on their sides, but they were organised, and actually they have been investing for the last 5 years into the health system. So after the recession, and the government's kind of fiscal policy was very much on spending, and so they centralised healthcare, and they got it back up to pre-austerity levels. 13% increase in national health worth of jobs in the last 5 years. An almost 20% increase in government spending on health overall in that time. So that's 1.6 billion euros. So it's the government doing it quickly in this case, when the outbreak happened. So they tried to increase laboratory and ventilator capacity. And what that meant is capacity was never reached. Everyone who needed it had the care they needed. So actually the death rate has been remarkably low. So going forward then, the President ends the state of emergency on the 2nd of May. There is a gradual plan for reopening the economy. Initially, that will be similarly to other European markets, manufacturing and construction are the kind of industries they want people to get into first, the kind of things people have to be on the ground, but that's great obviously for us in the property world. The schools are reopened for students older than 14 very shortly, and local tourism they're starting in June. And anecdotally, from contacts we have after the last week, there has been a surge in reservations down in the Algarve, domestically, of course, but yeah, still people are clearly shows a sentiment there in Portugal. But again, small, medium enterprises to open along with staggered resumption for large companies. So the government's really thinking about which member societies need aid and help more, and helping them first, and trying to think about a staggered plan to get everyone back into normal life. So predictions then from some of the larger consultancy firms are looking at the economy to start moving around mid-May towards 65 to 70% capacity by actually September time. So financially, what's happening and how the government's done this, the government's response in terms of economic stimulus is to put 9.2 billion into the economy, which equates to about 4.3% of the GDP. So what that actually means is it's general fiscal stimulus involving credit guarantees, some social security, and then actually, of course, tax relief for particularly SMEs, for smaller companies there. So a tax delay it is, so people have a bit of time there on their hands before they have to put in. And then 9th of March, they put an extra 200 million into SME loans, and then 10th of March another 100 million into business support and 60 million for small tourism operators. So thinking about those going to be worst affected, and then dealing with that directly. So in a general view, where Portugal has come in the last 5 years, its debt to GDP ratio has fallen from 117 from that previous peak, and that's been driven by their aggressive fiscal policy of spending. And so actually coming from a negative 2.5% GDP up to a positive 3.2, we were expected to keep seeing positive GDP around 2.7% this year, but this will probably, the debt to GDP ratio will then probably revert to about 124%. And so what that means in terms of full economic forecast is GDP is likely then to predict, this is Fitch's view, decrease by 3.7% this year, but I actually have one of the best rebounds in Europe. So 1% next year, and then by 2022, going up to 3.1%. So obviously comparing that to Eurozone average, a 4.2% fall this year, and then 2.9 by 2022, that compares very favorably. And similarly then to unemployment, and there had been a great success story. It had been, 17% some 10 years ago, and moved down to 6.7%. This year it'll probably rise to 10%, and then we'll look to have some kind of minor recovery for next year and improving onward from there.
Thank you, Jeremy. So, and then obviously we're all on this call, I presume, because of an interest in real estate. So really just to talk a little bit about that moving forward. Clearly, this is something that is not, Portugal is not alone in this. Over the last few weeks, there has been effectively a massive systemic pause in everything that has happened within sort of the real estate sort of transactions market. Ultimately, people haven't been viewing, they haven't been buying, they haven't been selling. And so for the last 4 or 5 weeks, virtually nothing 6 weeks, virtually nothing has happened. However, what has been interesting is that the number of online inquiries have risen. And as we come out, as we just heard from Jeremy, as we come out of lockdown, as people are able to, as the lockdown situation is loosened, people will be able to start buying again. And encouragingly, what you can see there on the screen is that actually, numbers from JLL and Idealista in terms of online inquiries, in terms of visits, requests to visit houses, etc., are actually increasing dramatically. There was almost also a 1% increase in international demand in terms of, again, inquiries being generated over the last few weeks. Now, possibly that's because everyone's stuck at home thinking about sunnier climes, but at the same time, this is all very positive data. There's actually been a price rise this year, January through to from February through to March there in 2020 of 2%. So again, I think all this just demonstrates that, assuming that we are coming out of lockdown in Portugal, assuming that things can sort of to some degree go back to normal, what we will see is transactions happening in the market again, and things to start moving. I mean, from a affordability point of view, another key fact there is that if you look at average annual salaries compared to prices across Portugal, the average is 3.8 times annual salary, which when you compare it to the Parises and New Yorks and Londons and so on of this world, it just shows that this is a tremendously well-priced value proposition. And actually, given how well they've managed things, we expect this to really bounce back very quickly in terms of transaction levels. I think it's also worth noting that if you look at any major financial crisis, and for example, 2008, 9, 10, the GFC in London and places like this, whenever there are issues economically and volatility, there is almost always a flight to safety and stability, which property obviously offers you. And if we move on to the next slide now, Jeremy, and to talk about the mortgages, this is, the reasons for this are obvious. So before I come on to that just very quickly, again, I've already mentioned that, I mean, there has been a pause in applications, in lawyers have been not so, they've been working from home and not so able to get things through as quickly. Construction has stopped for a little period of time. But all of that is now easing. The applications and the loans that we have going through the system have restarted again. And coming back to my previous point about that sort of flight to safety and the flight to real assets that you do see whenever there is increased volatility in share markets and so on around the world, one of the reasons for that is interest rates. Clearly, interest rates in Europe are at record lows at the moment. We've quoted 2.2 to 2.5% there on the screen. In actual fact, we have had buyers agreed at 1.7, 1.8%, which is, I mean, it's almost free money. And from that point of view, whenever you have a situation, we saw this in the GFC, post-GFC in 2008-9, whenever there is a situation of low interest rates, people borrow and people buy real estate, and that ultimately continues driving the demand. From a lettings perspective, it still remains, the market, I mentioned the undersupply figures earlier on. The markets are fundamentally undersupplied. And so from that perspective, whilst there has been a pause in viewings and tenants being able to move and all that sort of thing, this remains a very strong and reliable sector. And so from that perspective, we've got no concerns at all moving forward.
So very much in relation to that then, when there's opportunity and cheap finance around, very much coupled and married to that is the currency opportunity. And right now, you could very much look at this as a once in a generation time to be getting into markets in terms of the euro is right now historically very low, pretty much for if you're looking at holding any currency. But I've given the example here very specifically of the US dollar. largely because a lot of people will be based in that, here in the Middle East, pegged with the dirham, and the Hong Kong dollar has relation to it as well. So what we see here is probably corrections due in the next 5 years, because the dollar itself is very high and the euro is very low. So it takes movement from either really to narrow this gap. So right now we have a kind of window opportunity, and it's likely to be there for a little while. But the European Central Bank, they expect to keep their base rate at 0%. So that'll keep mortgage rates very low as well. So what we can see on the right hand side as an example is that a property for 300,000 euros, which you might have bought in 2014, pre-worldwide financial crisis, those rates would cost you equivalent of $417,000, whereas in today's rates, at 1.08, that same property is only $324,000, almost saving 100,000. So that's 23% less equity needed to get into these investments.
I mean, the other one obvious question that a few of you very kindly emailed in prior to the event today was, well, where are you looking in Portugal from an investment perspective? It's actually a very simple answer. For us, it's Lisbon and Porto. Lisbon is 45% of Portuguese GDP. Porto is 29% of Portuguese GDP, and whereas there is clearly places like the Algarve and so on, which have traditionally been popular destinations to go and buy Portuguese property. One of the key things that we're looking at whenever we buy property is the viability of that property within what previously was just a wild nightmare scenario, such as a pandemic, as we're in today. The first industries and types of property that are always going to be affected by something that we're seeing today are the holiday home investments. It's the Airbnb style investments, because unfortunately you can't rent them. There's no one's going on holiday, you can't get out. So whenever there is a financial crisis, whatever the cause, it is those industries and it is those types of properties that get affected first. They're the hardest to sell, they're the hardest to rent. And so from our point of view at IP, what we're always looking for is the highest, where are the jobs being created? Where is the highest concentration of workers? Where are the wealthiest sort of people within these countries? And where is the shortest supply of property being built? And it's very simple. When you drill it all down, Lisbon and Porto, that's where the money is. That's where the jobs are. That's where the jobs are being created. That's where the investment is. And ultimately moving forward, that is where the growth will be, and where if there is another, God forbid, another situation in 2 years' time where you say you bought something today and then we have wave 2 or 3 or whatever it might be of Corona, let's hope not, you've got a tenant that's in there for a year that will rent, that has to pay that rent, and your investment is much more secure than a house that you might not then be able to let out, but you have a mortgage on because no one's going on holiday. So at this point, what I'll do, one thing we haven't, neither Jeremy or I have really mentioned, is the famous Golden Visa program into Portugal. Something that has been a significant part of the growth story over the last few years. So at this point, I'll pass over to Mamoon and let him take you through the various opportunities related to that.
Yeah, thank you, Jeremy and Richard, for the invitation and for today's presentation. And I will add on so we can have time, go quickly, so we can have time for some Q&A also. And clearly, the Golden Visa is the cherry on the cake, I would say, in addition to being a great investment opportunity, like been presented by both Jeremy and Richard. One of the attraction of Portugal is for his Golden Visa. And as you clearly mentioned, Richard, one of the reasons of recovering also from the crisis of 2011-12, it was the implementation of this Golden Visa that attracted quite a lot of FDIs into the country, and that made it the dynamic countries, and also having two interesting cities like Lisbon and Porto benefiting from all of these inflows of Golden Visa. Obviously, from outside of Europe, in Asia. We've seen a lot of demand from Chinese, Indian, and that we have some South African also listening. Great demand from South Africa, from the Middle East, from some Indians, because some people, if they cannot allow, if they don't hold two nationalities, they are allowed to invest into residency. So this is a couple of slides to go through quickly the golden visa process. But first of all, about an introduction about our company, who we are. We are headquartered here in the UAE, but we have 12 offices all around the world. We have 30 staff in Dubai only, being so one of the largest Middle East and Africa residency and citizenship by investment company. 60 staff globally. We are focused on citizenship and residency since 2013. Into Dubai, we've processed many, in addition to the Caribbean and other part of the world, but the residency programs in Europe, you have a few, and Portugal is one of them, and definitely has been one of the most popular program that our client asked over the last 2 to 3 years. So it's from that point of view, this is clearly, in addition to the real estate investment that has been presented today by IP Global, this is another reason of investing into Portugal. Our firm, we not only market these companies, but we this program, but we also create them. So this is what we've been doing. This is a very powerful slide in terms of to give you how Portugal has become very popular over the last. It's been launched in 2013 and 2013. So it's more than 8,000 applications that have been dealt over the last 6-7 years. And in addition to also family members that have been included, so 22,000. So again, showing how popular is the program, and obviously for the residency scheme. And in addition, I was mentioning some of the Europeans, being a lot of the French are retiring, for example, in Portugal for some taxation reason. A lot of the British are also looking at Portugal because of the Brexit situation. Some of them wanted to also have a plan B in Portugal, so it has been also a good reason for driving investment, not only from outside of Europe, but also some of the Europe. So the benefit out of it for the people that are from this part of the world, from Middle East, Africa, and Asia, it's clearly to have a residency in Europe and being able to travel freely within the UAE. This is a great tool to not ask anymore for Schengen visa, and especially with this, we talked about this COVID situation, so we don't know when the embassies, consulate will open, Schengen visa will be taken on. So it's a great, definitely this is the first strong advantage for the golden visa is the mobility. In addition to that, is the fastest route to citizenship in Europe after the citizenship program like Malta and Cyprus. So after 5 years, you can apply for citizenship with one of the lowest minimum requirements stay in all of this residency program, only 7 days per annum, and you keep your residency, and then you renew it after year 1, year 3, and year 5. We'll see the process in the slides after. The advantage, obviously, there's no global taxation for Portuguese if you are living outside of Portugal for more than 180 days, and you can include the family members. You can have husband, wife, the kids, dependent kids, and also include the parents. And it's a great, as mentioned, plan B in the future. I mean, we have some people living here in this part of the world. They're thinking of applying in the next 5 years. Where do I want to settle? And Portugal has been some of the preferred destination for some of the people in the future to settle in Portugal. Next slide, please. So now the requirement, as you can see, I mean, we're doing all of the spectrum of citizenship and residency, and I can say that the residency in Portugal has been very, it's pretty smooth, and because first of all, it has the support of the government. The government is backing strongly the program, having created entity which are called SAFE that are handling your application. So these are in different cities in Portugal, so we're making sure that your application is received and we fix an appointment for your biometrics and all of that. And also you have also local support from the different embassy and consulate. For example, here in the UAE, you have the UAE embassy, the Portuguese embassy here in Abu Dhabi, who can help you with your application, and it can be also in other part of the world where we've been. So the strong support of the government make it very strong golden visa. In terms of requirements, as you can see, it's lighter to some of the citizenship requirement where it's required bank statement and all of and other due diligence that are pretty stringent, but obviously there still needs to be some requirement in terms of due diligence for the individual. And the investment is to head for 5 years to be eligible to ever apply for permanent residency and apply for citizenship. But obviously we advise to apply for citizenship after 5 years. And how does it work? There's going to be, obviously it's a naturalization process, so there's going to be some form of language test, small knowledge of Portuguese, and other ties into the community that's important to demonstrate that. So it's not a guaranteed, I would say 100%, because it's naturalization, and we cannot say it's a citizenship program like Cyprus and Malta, but the chances, if you spend time and in Portugal, you're eligible for this, for applying for citizenship. So we talked about like the process, I think. So the investment options. So clearly, the first one has been presented by IP is the one that we've seen. Most of the people, they want to have to own their own place. So in this case, you do your own due diligence and you go and buy your own flat, and you can, as you mentioned, rate it into Airbnb and have that choice. But in the law, I just want to bring these two because there are also some options that we've seen demand clients requesting for, I would say, a low budget, which are the 350,000 euros and the 280. And this one are laws that have been established by the Portuguese government to be able to for the refurbishment of some of the old buildings being in Porto or other cities, or in low density area like we have. There's an investment in the south near Algarve. You mentioned Algarve earlier, so this is one of the investments is there. But this, obviously, in partnership with IP, we will guide you through the best option and budget depending on your requirement and what you're looking at, depending on your needs. So these are the investment options. The next slide, please. Sorry, I try to keep it short because I know we have a lot of questions, so we want to also give you the being able to answer these questions. So now in terms of the golden visa application, yeah, it's pretty smooth process as we mentioned. So we sign along with when you're selecting your properties, we're starting your visa application. So we submit all of the files with the local lawyer in Portugal that will organize like your safe appointment. Safe is what we call is managing the residency schemes in Portugal, and then they will handle your file to invite you to do your biometrics in Portugal. And then after that, they will issue the residency card. Usually it depends on the cities. It can be, I mean, the smaller cities, it tends to be longer. We've seen, obviously, because of the demand in Lisbon and Porto, that we've been dragging. It used to be 2 to 3 months to save. Now it's going to go 3 to 4 months, and then 3 to 4 months to get the card. So it's a 6 to 9 months process. But again, it depends on the cities where you apply for citizenship. Then after the process is you get it for 1 year, and then after year 1 you renew it, you get it for another 2 years. So in year 3 you renew it for another 2 years, and then at year 5 this is where you apply for your citizenship. So this is in a nutshell the whole process that's coming with the real estate component, and it's a great tool to have, and that is why also that's driving prices of the real estate in Portugal. And per se, there's been some discussion at the beginning of the year to limit it into big cities, but it's been put on hold. It's been rescheduled at least for 2021, and now with the situation with the COVID, clearly the Portuguese government will definitely keep that and to attract FDIs into the countries. So thank you for that. Thank you again for IP and IP Global and Richard and Jeremy. And now I give back the floor to Jeremy and Richard to see the questions and if we can handle them.
Thanks very much, Moon. Yeah, following on from that, very much in relation to what you're going to buy then, if it's going to be for investment or it's going to be for a visa process. Some of the properties we have can be included in this, and so I just wanted to give an example here of a property that we're dealing with in Lisbon, which is available, and some of the units in here, particularly actually the 2 beds with the better views, are eligible for the golden visa. So, but yeah, this is a project called Bella Vista. It's in an area called Grassa, which is very much a few minutes walk from the prime city centre. And so, as Richard was mentioning earlier, in terms of the value of this city in prime Lisbon compared to other major European capitals, the average being around €8,000 a square metre, we've found area here you can see in the blue section to the right of the map area there. Grassa is a historical area, very nice neighbourhood. It's the project itself here is sitting on a hill. You can see the picture at the bottom middle here is actually an actual photo from during construction, looking back onto the Tagus River in there, and it has the National Pantheon as one of the major cathedrals there. So great views. Good location in the city, and we've taken up 1 and 2 beds here as we would in most markets, because it's going to be the most transactable. It's going to be the easiest to rent, get the highest percentage of rent compared to property price, and then for the most liquid over time. So we can see rent rises and capital growth coming. So this, if you would like to talk about it, is available for you to look at. And other than that, we'll have other options in Portugal going forward.
So I think, in conclusion, just to wrap up before we go into questions. So obviously, what we're seeing here is the gradual loosening of the lockdown, which is going to lead to increased transactions. The opportunity in Portugal is significant from a capital growth, from a rental opportunity point of view moving forward. This will be driven by the low cost of borrowing. I'll talk about the weak euro. And what we would say, this is a very uncertain and difficult and unexpected time, is what you need to do is stick to your investment principles. Ultimately, the reasons we are buying in Portugal are exactly the same reasons, why we'd buy today versus why we were buying 6 months ago or 2 years ago. I mean, ultimately, it is all about the long-term supply and demand aspect of it that is going to drive prices upwards. It's about the investment and the sort of resilience of that market. There's a great quote on the next slide, Jeremy, if you can move on, from Liam Bailey, Head of Global Research for Knight Frank. Lisbon, Monaco, Vienna and Shanghai are the only 4 major prime residential markets set to see price growth throughout the remainder of 2020 as the impact of COVID-19 takes its toll on residential property markets around the world. Looking ahead to 2021, we expect to see a slight rebound in most markets, but London and Lisbon are out in front. Now, we're doing a London webinar in the next couple of weeks' time where we'll be talking about that market particularly, so that really chimes with our thinking. Continue the quote, with forecast growth up above 5%. Lisbon's handling of the crisis, combined with strengthening demand and limited prime supply, will underpin price growth. This in a nutshell is why we believe that if you are looking for a reduced volatility investment, an asset that should ride this crisis out, that is not a short-term asset, that is something that you buy and hold and sit on, and in 5, 10, 15 years time come back to and delighted you've done it because the values have risen, all that sort of thing. Portugal is a market that works. Lisbon and Porto obviously have different sort of aspects to them, different reasons why you might buy in Porto as opposed to Lisbon, but ultimately these are markets that work. And so I'll just round off by saying thank you very much for attending. It's been fantastic having you on. Now, we have, Jeremy, I presume we've got some questions that come in over the last half hour or so.
Yeah, exactly. And so, there is a basic end time limit on the whole webinar. So we'll try and get through as many as possible. There are a lot of questions that come in. So basically, we'll get back to everyone individually afterwards as well with all those, with your consultants, so we can answer every single question. But a theme from a few of the questions coming in. The first one there is actually one from Mamoon. Is the golden visa is it going to be cancelled? I think there was some talk pre-COVID-19 about that and the NHR tax incentives being cancelled, and also then one specifically about the language test. Would that potentially be cancelled at some point?
Yeah, thanks. Good. Yeah, exactly. No, the golden visa will not be cancelled. There's been election at the end of last year, around September, October, with a new government, and there's been some concerns from the local population about, because it's so popular, that there's been a price increase about like limiting certain area of Portugal. So there have been discussion, but nothing has been concrete. I mean, this was early of this year. In any case, it was supposed to happen in 2021, but this, for now, it's put on hold. So your real estate investment, if you're putting it for now till, and if these discussions come back again, it's still valid. And the language test is still there, but things are evolving. I mean, you never know what the government will come back with, but definitely the golden visa is there. And more than ever, the government will be behind it, because it's going to attract a lot of people, and it's a great destination to invest in.
Excellent. No, thanks for that. I think one that seems to be, I'll generalize this question, it seems to have come from a few different people in the same ways, but basically trying to compare Porto to Lisbon. Someone's asked about how do the rent to purchase prices differ, basically how the yields differ between there, and generally what is best. Is there an answer to that, say which is best, Porto or Lisbon? So Richard, perhaps you could give an answer on that.
I think, I mean, the classic answer, or not answer, I should say, to that question when someone asks is what's the best investment, is always to say, well, what are you trying to achieve? And so the answer to that question is very specific to your individual needs. However, as a general rule, there are one or two sort of clear differences between Porto and Lisbon. So Porto is the second city, and similar to how you might see a relationship perhaps between London and Manchester, or somewhere like that, or Berlin and Leipzig, for example, what you see is the lower average price point in Lisbon. In Porto. Porto is the cheaper entry level, and you tend to see a slightly higher gross yield there. So you might achieve a yield of 5-6% in Porto, as opposed to perhaps 4 to 5% in Lisbon, with Lisbon being the slightly higher, sort of entry level from a price perspective. What you've got to remember, of course, is that yield is a reflection on demand, and the fact that there is a lower yield in Lisbon actually reflects the fact that it is the most in-demand property in Portugal. And ultimately, when you're looking at what you're trying to achieve and how you're going to make your money over a longer period of time, Lisbon is where we foresee and where generally the reports out there foresee the higher capital growth moving forward. You're muted, Jeremy.
Beg your pardon. Sorry, another one about the golden visa process here from Moon. Are there any nationalities that cannot apply? Is there any restrictions basically for it?
Yeah, it's a good question, because in other programs that we're having, there's some restrictions, for example, Iranian or North Korean or Sudanese. In the case of Portugal, there are no restrictions. All the candidates can apply. Obviously, it's subject to the government for the authorization, but there's no such detailed restrictions on nationalities. So, for example, Iranians can apply, Sudanese also, and I think from the people that we have here, it's mainly from Middle East and Africa and Asia. All of this we've seen a lot of the demand from this part of the world.
Someone then mentioning here about Portugal relying heavily on tourism. What's that? Is that going to be an effect generally on the property market? And what are our comments on that?
I think on that sort of relates to what I said a little bit earlier. What we're trying to achieve at IP Global is to provide the cornerstone assets of people's portfolios, investment portfolios, assets that, regardless of kind of what's going on in the world, there is a demand that there's a demand for, so that you can still sell, you can still rent, regardless of what the situation is. Clearly tourism is a huge factor in Portugal and one of the main drivers for the economy. That said, that's why we're doing the type of property we're doing, because these are properties that will be rented by people working in Lisbon, primarily, as opposed to tourists coming in and out. So if you're buying property to rent in the as an investment in the sort of the tourist market, yes, there are potentially higher rental returns through the short-term lets model, but it comes at an increased risk, and that risk is all too plain to see at the moment. So, I mean, it's, you know, I think our advice would be to stick. If you want something boring that works in the long term and doesn't give you too many heart attacks through the ownership of the lifetime of that asset, we would stick to the type of assets that we get involved in, as opposed to that sort of higher risk model.
Lovely. And but I think we'll take one more here. As I say, there are a lot of questions there, and all kinds of very specific ones and so forth. So we'll be able to kind of get back to you individually on that, or introduce you to one of the guys at Rift Trust here. But one last one then, just in terms of return on investment, basically, what kind of property someone says is the best, and it's partly what you were saying before, I think, but is the best return on investment? Someone specifically looking at long-term rentals in residential areas, short-term lease in touristy areas, or potentially something in the seaside, because obviously a lot of people buy that in Portugal.
Yeah, I mean, our sort of method at IP has always revolved around buying 1 and 2, sometimes 3 bedroom, sometimes studio flats in high demand residential areas, a short travel distance away from areas of commerce, places of places where people work, with good transport links. It really is that simple, and actually that model thing, that's good property investing, whether it's London, Lisbon, Melbourne, or wherever it is. Ultimately, if you follow those key things, you'll end up buying something. You should end up buying something that's sensible.
Perfect. And I think that's probably a great place to wrap up. It's just a reminder on kind of whether you're doing it through us or doing it yourself, stick to your investment principles, and buy things for the right reasons, and you don't really kind of change your position whether big events like this happen in the market. The right property should be the right thing for 10, 15, 20 years. So yeah, thank you all for joining us, and we'll be in touch. And please do email us if you'd like the slides, or if you'd like to have any further information, and we'll individually get back on the questions you asked here today. So thank you, Mamoon, for joining us and giving us that, and thank you, Richard.
Thank you, Jeremy. Thank you, Mamoon.
Thank you very much. Thank you very much. Thank you very much, Richard and Jeremy.